Wonderful. So I'm Allison Reed here at the Bishop's office, and we are delighted to have you all joining us this afternoon. We'll start off with just a few short words of introduction before we begin. Today is our third and final session in our three-part workshop series for wardens, treasurers, and vestry members. And if you have missed any of our previous sessions, don't worry, because we are recording all of these and they'll be available to you on the EDOLA website in our new workshop library video section. So you'll be able to find and view those anytime. And we know some churches are already planning to use these videos for vestry retreats and other training purposes. So that is wonderful, and we hope these will be useful to you. Today, we're going to wrap up our series with fraud prevention, internal controls, and audits. And we are delighted to welcome Drew Chapman and Chris Speed to lead our session. Drew Chapman is CPA, and he serves as Audit Director for Bourgeois Bennett, LLC. He specializes in financial audits and reviews, employee benefit plan audits, internal control assessments, and his clients include construction, nonprofit, education, and maritime industries. He's performed audits ranging from startup nonprofits all the way to publicly traded financial institutions. We're delighted to have Drew with us today. And many of you know Chris Speed. He is our diocesan administrator. He's worked on the bishop's staff for the past 10 years. And prior to this, you all may know him from his work at Christ Church Cathedral, where he served 4 years as their parish administrator. So we're so thankful to have this duo with us today to share your perspectives. Thanks for having me.
Thanks, Allison, and thank you all for joining us today. This is a subject matter that I know both Bishop Duckworth and Alan Brackett, our diocesan treasurer, feel super strongly about. At a gathering of some of our administrators, I spoke with them specifically on fraud in our churches, I believe just before COVID. And so it's been a while since that time, which I know it doesn't feel like it. But we felt like, one, this was an important topic for our wardens and treasurers, and two, we thought it might be more helpful to have not only another voice on the subject, but certainly a more expert voice than mine. And so that's why we've asked Drew, who has worked on the diocesan audit as one of Bourgeois Bennett's auditors for several years now, to come out and help us. Both Bishop Duckworth and I started working on the diocesan staff within like a month of each other, which we're both coming up on 10 years, which is hard to believe as well. And I think since that time period, there have been 6 instances of internal fraud at our churches and over that 10 years. And that's just internal fraud. That's not including the sort of external. I tell you what, people out there love to steal our checks out of our mailboxes lately, don't they? But just strictly internally speaking, it's been about 6, which over 10 years, that comes out to be about 1 every year and a half, which is just kind of too often for comfort. 6 is too many, and really 1 is too many because of the effects it can have on a church go far beyond the financial loss. It tarnishes a church's reputation. It erodes the trust of the congregation. We've been called to be good stewards, and this is part of good stewardship. As sort of an FYI, I have given Drew a summary of sorts, or a brief summary of some of these past cases, if we'll call them that, as a bit of background to help illustrate what our weaknesses have been in the past. In my summary to him, I what do they say in the cop shows? Like I've changed the names to protect the innocent. Since not everybody's been charged with a crime, not everybody's been found guilty of a crime. And also we're in a bit of mixed company here. And it's a public forum, so it just seemed like the most appropriate thing to do. I know there's a Q&A section at the end of this where they're going to turn off the recording. And I think we're hoping that y'all maybe stick with that approach that I've had or best practice, and maybe we don't get too specific. If it sounds like a comment or a question is sounding like it's referring to a specific person. So hopefully y'all have more like hypothetical process type questions. I'm going to put my info in the chat as soon as I figure out how to do that. And y'all can take down my phone number and my email address if you need to speak with me about specific concerns that you have going on at your church. And of course, if you ever suspect fraud is occurring at your church, I imagine your first call is going to be either to your rector or your priest in charge. And your second call is likely to us, so don't hesitate to reach out to Canon McIntyre or myself or both of us. So I'm going to stop talking at this point and get out of Drew's way so he can jump right in. So Episcopal Diocese of Louisiana, let me introduce Drew Chapman from Bourgeois Bennett.
All right. Thank you, Chris. Thank you, Canon Allison. I just want to thank you for inviting us to do this. As Chris said, myself and Paul Pichon, who is also on the call, have been working with the Episcopal Diocese for close to 7 years now, if not a little bit longer. And we really do appreciate the relationship that we've garnered with you guys. And we want to make sure that we're doing our part by actively helping you. So as part of that, we came up with this presentation. Chris came up with this presentation and asked us to help. And I just want to start us off with a couple comments. Chris said previously that we are called to be good stewards of the financial resources that we have been given. And I want to kind of dig a little deeper and point out that good stewardship is often active stewardship. And so what we're going to be talking about are ways to actively be good stewards. The overall goal of this presentation is not to leave you with a list of things that you need to be doing. It is to get you thinking in a questioning what could go wrong type of way, and give you some tools and some suggestions on ways to address things that could go wrong. I, as an auditor, live in a world of what could go wrong. Sometimes it is exhausting. And so what I want to do is just kind of set you off down that path of actively looking at your current environment, the things that you can control, and what we can do to control those things as best we can. So I will jump right off. One other quick note, sorry. I understand that we have churches with less than one full-time staff, all the way up to churches with 3 or more full-time staff. So a lot of the controls and procedures that I'm speaking about today may fit your needs. They may be outside of your capabilities. So we will present them as they are and then invite questions at the end. As I was getting prepared for this, I was looking up, there's a Church Law and Tax Association, and what they do is they do an annual survey to come up with items that are affecting churches. And so out of 700 respondents in the 2021 survey, over 30% experienced financial misconduct, and over 15% of those experienced financial misconduct in the last 10 years. That comes up to be right at about the rate that we were talking about with Chris earlier of about 6 instances in the last 10 years. So point out that the Episcopal Diocese is on average with fraud. Of those frauds that were experienced, 14% lost more than $100,000, 69% lost less, and 15% had no real way of coming up with how much they lost. I would imagine that most of those fall below the 100, or would hope that they fall below 100. Controls and processes, we focus on what we can control, and we take a risk-based approach. And so we triage things and what is most likely to happen. So of the financial misconduct that was reported in the survey, 42% of those were cases of inappropriate reimbursements or expenses. 30% were stolen contributions, and 12% were theft of church assets, things like property and equipment that is around the church and used by the church. So what we're going to do today is we're going to focus on those three because those are the most likely to happen. And then I do want to point out that nearly 70% of victimized churches did not report to the police. That kind of, we'll get to setting a tone at the top later on, and that's one of the things that really drives that. In order for fraud to exist, we need three things. We need pressure or incentive to commit fraud. We need to be able to rationalize that what we're doing is okay for some reason. And then we need to have the opportunity to commit that fraud. We need to have access to those assets or to that cash. So as far as pressures, these are the why fraud gets committed. They can be internal or external sources. Internal may be disagreements with management. We see that a lot less with churches. External, and this is the main driver for most fraud, it's money problems at home, medical expenses, living outside of your ability and your lifestyle. And so this is why people commit fraud. Opportunity, or how people commit fraud, is really what we are best positioned to control. If we paid all of our employees $1 million a year, they wouldn't have much need to commit fraud. We do not have that ability, so let's focus on reducing the opportunity to commit fraud. And finally, the rationalizations. I find these very interesting, especially in cases of church fraud, and these are very common. It's that internal suggestion of I'll pay it back later, and then something snowballs and it gets worse and worse. That is one of the main ones that you'll see in church fraud. It's not enough money to matter. As Chris said at the top of this, when we're eroding trust in the parish, that is, I would say, more important sometimes than the financial implications. So even if it's not a lot of money, if we're eroding trust, we are setting down the wrong course. And then the last one is a little bit more selfish of I simply deserve this. I work too hard for what I'm paid, and so I need the extra, I need my cable bill paid by the church. And so again, all frauds, when they are studied, have all three of these elements. So when you are assessing your own personal risk, what you want to look at are any pressures on employees or people that have access to financial assets, and whether or not it may cause pressure on them to commit fraud. If anyone involved in the process is really great at rationalization, and if you are providing lots of opportunities for fraud to occur. All right. Again, I'm going to get into some pretty prescriptive controls and policies. But I want to caveat that with there is a cost-benefit relationship here. The idea is to do as much as we can with the resources that are available to us. I've got in this presentation about 4 different times the quote, "Control what you can." I kind of like that as a common theme as we go through this. When I'm assessing fraud and when I'm doing control assessments, I'm looking at an organization's ability to prevent, detect, and deter fraud. Everybody wants to prevent fraud. Preventing fraud 100% is very expensive. It's very costly. I joke around with Chris that if I was going to look at 100% of the transactions of the diocese, I would be there for 6 months and he would get very tired of me. Detection of fraud and early detection of fraud is an extremely valuable tool in fighting fraud. In instances of church fraud especially, what we find is that they are made up of lots of small transactions. It is not stealing $100,000 one day out of the collection plate. It is stealing $20 out of the collection plate over a period of years. What that means is if we're able to detect that $20 is gone and we follow up on it, we are then going to deter that fraud from happening again. So we're going to focus a lot on detection, and it may seem like we are a little bit behind the 8 ball, but when we are doing our cost benefit analysis and making the most out of the resources available to us, early detection is one of the strongest tools that we do have. All right. So I've already been talking about internal controls a lot without setting the groundwork for what they are. Internal controls are a set of prescribed, written, repeatable processes that control our transaction cycles. As we are setting these up, it's important that we establish specific responsibilities, that we write these down, that they are specific, and that we follow them consistently. A great control system is one where I can say, what are the processes around accounts payable? And the church or the parish has a clearly defined description of who's in charge of what, who writes the check, who signs the check, who reviews the check. Whenever you are coming up with your internal control environment, specificity is key. The second principle is maintaining adequate records. Adequate records are records that are organized, that we can draw back to whenever questions come up. If we see an interesting transaction on a bank statement, we can automatically go back to the records that back it up. Adequate records seems like an easy requirement. It is often the one that falls with less involvement. And it's the kind of thing where if you don't keep your records consistently and organized as transactions come up, it's very difficult to go back in time and rework those. Of course, we want to insure our assets and bond our key employees. You can take out insurance policies for employee theft. That may be something that you want to look into based on the size of the organization. Number 4 is separating record keeping from custody of assets. When we say custody of assets, that may mean control of the checks. So it's not just who controls individual assets, but it's also access to assets. Finally, segregation of duties. When we look at transaction cycles, we look at who initiates the transaction cycle, who has the need for the expense, and who puts it through. We look at the authorization of a transaction, which is who approves it. And then we look at who records it, which is who does the record keeping, who puts it into the accounting system. If possible, we love for those 3 areas to be completely separate. That is the strongest control environment that you can have. Again, I completely understand that some of the churches we're talking to today do not have that capability. What we've got are some mitigating controls that will help overcome that staff size. Number 6 is to use the technology that we have. When we get into the case studies, you'll see that there are some where, a church had security cameras, but maybe they weren't being used to their potential. There are lots of aspects of our technology, be it in the accounting system, with our banking system, such as Positive Pay, that if we're using all of those or more of those, we are going to deter more fraud. And finally, perform regular reviews. As I've said a few times, there is no perfect control system. Everything is about cost and benefit. Doing a debrief and asking yourself, is this control environment operating like I expect it to on a regular basis, will allow you to make changes and continuously improve. All right. What I've got next are 7 instances of fraud from local parishes and some ways that they could have been prevented or detected. Again, the reason that we're going over this is not to shame any individual church. We are getting ourselves thinking about what could go wrong so that when you look at your own parish, you might see some parallels. All of these that we're going to discuss, we're not going to get into the incentives of fraud or the pressures of fraud. We're just looking at the opportunity and what we can control. So In this first one, we have a bookkeeper that was writing checks to cash instead of their own name for the salary that was paid out on a regular basis. In doing so, the amounts that were paid to that person for their salary did not correspond to the salary arrangement. To illustrate, let's just say this person was supposed to get paid $500 a week for some part-time work. They were writing themselves instead a check for $550 a week. But rather than writing themselves a check, they're writing it to cash for $550. And it's obfuscating our ability to look at the bank statement and see that a $550 check went to the bookkeeper because we only see a $550 check going to cash. Additionally, this bookkeeper was handling Sunday collections alone, taking the collection home and taking days to deposit. A lot going on in that last statement that is incorrect, and we're gonna get to that. So for the same case study, let's look at some ideas of controls that would address these risks and either prevent the fraud or detect it quickly enough to stop it before it gets worse. First policy, there should be no checks written to cash. If there is some extenuating circumstance that I'm having a hard time coming up with on the fly, if your bookkeeper was writing a check to cash, I would expect to see a letter signed by a rector that says, yes, this is okay. It's for this weird purpose. It only happens once. There's just really no reason that we're going to be writing any checks to cash. We always recommend that 2 or more people are involved with every collection or deposit. When we get to the end, I've got some prescribed controls and you'll see that illustrated. Again, the more people that are involved with something, the more difficult it is to commit fraud. So that same line of thinking comes with the 2 or more people being involved with each disbursement. Because this person was writing checks to themselves, I have a feeling that someone other than that person wasn't approving or signing the checks. And so we always want to separate those duties if we can. Timely deposits. The longer that cash sits anywhere, be it at the church or at someone's house where it shouldn't be in the first place, the more opportunities there are. Agree amounts paid for salary to the salary arrangement. That's just kind of a monthly check that I would recommend. Review of bank statements and agree to underlying documentation. It's my opinion that any check that's written, any cash that's pulled out, anything should be supported by some kind of documentation. If someone other than the person writing the checks looks at your bank statements and says, this one looks strange, it's a check written to cash, will you show me the backup for it? That's the level of review that we are suggesting needs to happen just about everywhere. And lastly, this is about the third one that we've talked about, that is a separation of duties issue. The person who is signing the check is ostensibly someone who is approving it, should not be the same person that is writing the check. So if we can separate those 2 functions, that is an easy thing that is going to catch or deter a lot of fraud. In our second, we have a bookkeeper who is writing checks for unauthorized personal expenses. This is not the example, but let's say that person's Cox bill was getting mailed to the church. They're paying it with a church check and going on about their day. This person also had checks made payable to cash and payroll taxes that were not paid. Payroll taxes, of course, what's withheld from a paycheck and needs to be filed with the government at least quarterly. This person was not making those payments, and so it was a significant liability to the church when it was discovered. You're going to see a lot of these recommendations repeated because there are some very simple things we can do that will help a ton. On case study 2, some prevention and detection, I will again repeat that we really shouldn't have any checks written to cash. The reason that something is written to cash is so that it draws less of a red flag in review later on, and so that it's more difficult to follow up on. Review of bank statements and agree to underlying documentation. If someone was reviewing the bank statements and saw a bill for Cox Cable, but they knew that the church didn't use Cox, then that's how that type of fraud is easily discovered. One of my favorites is Amazon. Everybody is ordering from Amazon, and so if you see 10 transactions to Amazon, you want to look at what was this one for, and ask yourself, is this for the church, or is this somebody getting their paper towels delivered to their house? And finally, as far as the payroll taxes not being paid, this is something that we recommend almost unilaterally. It is to create a monthly or quarterly or yearly checklist of those frequently missed items. Now, I can't tell you what those frequently missed items are. It depends on your parish specifically, but I would certainly put quarterly payroll tax payments on there. One of the other highly occurring methods of fraud in churches was theft of church assets. In this one, we had a maintenance worker who was stealing fixed assets, tools, equipment, or items that are used in service. And in this one, possible concealment was that the video camera, which was placed on items of value, was moved so that it wasn't picking everything up. So what are some ways we can prevent and detect this type of fraud? The first thing we can do is we can maintain an inventory of anything of value. I would certainly recommend any laptops, computers, things like that, things that are easily stolen. You may want to look at some of the less used service items. If you've got a beautiful chalice that you only use once a year, maybe we need to check on it a little more regularly to see if it's there. So again, I'm going to speak to being an active steward. Creating an inventory list is a great first step. But if we're not regularly taking that list of inventory and comparing it to what we actually have on hand, we're only getting halfway there. So there is an active piece that is there. And lastly, as good as video cameras are, there may be some more active stewardship that needs to be involved with those. Are they pointed in the right place? Maybe we fix them so they can't be moved, or we're reviewing them to see if someone else is moving them. In our next case study, we have a rector that was paying unauthorized personal expenses from the discretionary fund. While this is very similar to some case studies that we've already discussed, one of the reasons I wanted to highlight this one is because it involves a rector. It is in our nature, when we trust someone, not necessarily to suspend all controls, but to say, oh, it's okay, we don't need to follow steps 1, 2, and 3 of getting a disbursement approved because it's for the priest. I bring this one up because consistency of controls is 100% necessary. I don't think anybody wants to buy a boat that floats 90% of the time. We want to buy a boat that floats 100% of the time. And so our control environment is only as good, is only good if we're going to use it consistently. Some controls that would have prevented or deterred this. I hope that you guys are getting tired of me saying these because they're very common, and that's what I'm trying to drive home. If we were reviewing bank statements and agreeing those to underlying documentation, we may ask why personal expenses were being paid out of the church funds. Why are we starting with the bank statement instead of just looking at checks, or instead of just looking at a list of disbursements? The reason for that is because the bank statement is not going to be changed. It's coming directly from the bank. It is a complete list of transactions that are affecting cash. And that's why it's a better place to start for a thorough review than simply printing out a list of checks. If you ask me to print out a list of checks, I can export it to Excel, delete the one I don't want you to know about, and give you a full list. I'll reiterate that no one should fall outside of controls. If we had someone other than the disperser approving all the checks, they may ask about this before the check is written. And as always, we want to separate the check signer from the check writer. All right. In this next one, we have a bookkeeper that was double booking tax payments. And then they were going to the bank and saying, oh, that second check, that duplicate check, why don't you just convert it to a cashier's check for me? And then they were pocketing all that money. This case study involves a lot of effort to conceal. Whenever there's a lot of effort to conceal, fraud gets more difficult to detect and to deter. So what are some things that we could have done? Well, if someone is reviewing the bank statements and they see a regular check and a cashier's check for the same amount, that's going to raise a red flag for me if I'm doing a good, thorough review. If 2 or more people are involved with every disbursement, then before that check is double written, someone may say, I think I've already signed this check. Requiring someone other than the person writing the check to approve it is that extra level of control. And I'm going to repeat it again. The check signer and the check writer need to be 2 different people for exactly this type of reason. All right. Case study 6 involves a bookkeeper that was inflating their salary on paychecks, inflated their reimbursement checks, and made paycheck advances that were unpaid. So we got a lot of little things that are going on. Again, a lot of these little things are going to add up over time. And when we're talking about church fraud especially, we typically see it being a lot of little things. So the controls that would have caught this are the same that we have discussed to this point. And so the thing that is different about this is I would suggest no check advances on salary. If there is that 1 in 10 year situation where we decide that that is an appropriate action, it needs to be approved, it needs to be documented, and everybody there needs to know about it so that this person can't just not pay it back. Our last case study that I want to go over is a very interesting one. In this one, the warden took control over everything is how it was represented to me. And I think that's pretty accurate. They changed the password on the computer. They changed the billing addresses. They changed the locks in the office. They had their own ATM card with the check's bank account that they could use to get cash. And of course, they were paying their own personal expenses with the check, with the church account. The reason I really wanted to spend some time on this one is because the actions of this person, if you take a step back and you say, is it reasonable that the warden is changing the locks? There may be one reason for that. Is it reasonable that the billing address was changed? Absolutely not. Is it reasonable that all the PC passwords were changed and only one person knew the password? No. So when we are looking at our parish and our control environment and the risks that we have, this is the type of thing that should come up and say, well, this person is acting a little bit out of the ordinary. And so this raises the risk of fraud involving this person. So this idea of constant consideration of what are some of the incentives, pressures, and opportunities that I'm presenting my employees, this is one that we need to look at. Some things that would have caught this, if 2 people were involved with every collection and every disbursement, well, then this person would not have sole control over anything. And so that's just the easy one right there. The rest of these are ones that we have discussed already. At the end of this, what I hope that I've reiterated is that the more number of people that are involved with something, the less likely fraud is to occur. No one should have complete authority over the church's assets. And that having consistent documentation to be consulted when something is found in review to be unusual is really how we're going to catch fraud and how we're going to deter future fraud. So You may recognize that this is a Waffle House menu. And what we know about the Waffle House menu is that it is huge, it is all encompassing, and there is something for everyone on it. I'm a firm believer that if you can't find something at Waffle House that you like, we won't be friends. Controls that are available to you are as extensive as the Waffle House menu. None of them individually are going to fit all your needs. And if you try to institute all of them, it's going to be way too much for you. So if you ordered everything on the Waffle House menu, you're certainly not going to enjoy it, I hope. So the things that we're going to do is we're going to go over some basic controls and some recommendations that I make to churches of small to medium size. But I want everybody to understand that not all of these are going to fit you, and you may not need all of these. Couple disclaimers. I'm an auditor. I live in what could go wrong. Collusion, or when two or more people work together to commit fraud, makes it incredibly difficult to detect or to prevent. No control environment is 100% perfect. Controls are only part of a system, and that system needs to be constantly reevaluated. The more controls you put in place, the more cumbersome a process becomes. If we need 100 people to approve a check before we send it, we're not going to have any fraud, but we're also not going to get anything done. So there's a balance to be struck. And finally, controls only work if you stick to them 100% of the time. We're not going to write that one check to cash unless it's absolutely necessary. So exceptions are where fraud occurs. For collections, I would suggest that 2 people should be present for all count collections at a Sunday service. Those 2 people should write down the total that's collected, and they should both agree to that total, count it, and sign it. So we have 2 people who are representing that, let's have fun with it, $30,000 was collected this Sunday. We hope we get $30,000 this Sunday. 2 copies of that sheet should be made. 1 copy should be filed away so that it can be consulted later. The other copy should be maintained with the collection until it is deposited. After collection, it should be securely locked, preferably at the church. I know that there may be some extenuating circumstances where that may not be the best place for that money. You understand the risks at your parish. Let's put it somewhere safe. That's what's important. A third person then should prepare the deposit slip and make the deposit on Monday morning. I put that with some asterisks beside it. The longer you wait, the more opportunity you're giving someone to commit fraud. That deposit slip should be stapled to the count sheet that was with it so that we have those 2 items together. And then finally, on a regular basis, those 2 count sheets should be reconciled to make sure that a change wasn't made on one of them and that the collection deposits agree to what actually made it to the bank statement. So that is one process that is going to involve 4 total people. The 2 people who are counting the collections may be the ushers for the day. So that's an easy one. But the ones below that are probably going to require staff or a vestry member or a finance committee member or something to that effect. So I understand that this involves a fair amount of available people. Disbursements. A lot of times when we're designing controls for disbursements, we forget about ACHs and automatic bills, and we think, oh, let's just control the checks, and those automatic bills are going to control themselves. They don't. First thing, let's go to the bank and let's ask them who are all authorized signers on this account. I would be shocked if you didn't have some vestry member who left 10 years ago that was still listed on that signer card. Dealt with enough churches to know that that's how things work. So let's clean that up. I like setting limits where checks over a certain amount require 2 signatures. That can be another vestry member, it could be anybody. But what you're doing again is you're involving more people into a process that's higher risk. Higher the check, the higher the risk. We've talked about separating the function of preparing checks from the function of approving and signing them. That is almost a non-negotiable. This person that is signing may not be the bookkeeper. It may not be somebody who has a lot of financial experience. So we need to educate that signer about following the controls. They're only going to sign it after they review the support and they agree with the support. If there's anything that they're questioning, they're going to wait to get an answer before they sign it. Once those checks are signed, all the support for those should be maintained in a consistent manner. Again, we want the ability to look at the bank statement and say, show me the support for this. And lastly, those ACH and virtual payments, I would require documented approval before they are made. So you're going to follow the same process like you would for a check. But before someone clicks that pay now button, they've got a letter saying, yes, we approve of this payment. Monthly review. These are just some standard controls that I would look at least monthly. First of all, reconcile all bank accounts. I can't tell you how many times we discover fraud and we start looking at bank reconciliations and they're a year or more behind. Bank reconciliations are the #1 catcher of fraud. Now, who should do that reconciliation? I understand that we generally are I would love it if it was somebody that was completely uninvolved with the disbursement process. That would be optimum. I understand that's not going to be the case most of the time. So in that case, someone other than the person reconciling it should be reviewing it. And that person should have a curious nature and say, is this check appropriate? I see that you charged $15,000 to cash over and short this year. Following up on those things that look strange. Bank statements should include copies of all checks. A lot of times now, your bank is going to send you a bank statement and it's not going to have all the checks behind it. You need to either request that or go download them online from the online portal. And the reason for that is so you can look at the checks and make sure that they have the correct signature. We love to say that our banks are looking at the signatures and making sure that they're correct. I can tell you right now, it's very easy to get a fake signature through a bank. So you want to make sure that you are reviewing on your own. On your bank reconciliation, the review should include comparing items on the bank statement to support. So we're not just looking at, do these things add up to the correct number? We're saying this looks like a strange check. Let's follow it up. And finally, let's prepare full financial statements each month. When you do this, you'll see that balance sheet accounts may stick out. You may notice that the account hasn't changed in 6 months. Again, you're inviting questions based on results. Some other quick recommendations: budget to actual comparisons are awesome. I don't think we do them enough. Let's document all of our processes and remain consistent. That's how we started this. Comparing salary expenses to salary arrangements. We had 3 of our case studies that involved incorrect amounts being paid for salary. Consider a regular inventory of assets. In the case of reimbursements, when someone buys something with their own money and they're getting reimbursed for it, that reimbursement request should be approved by someone other than the person requesting it. I think that's kind of a no-brainer. I want to remind you that church fraud typically occurs over a long period of time. We have to bring our scope for what we are worried about down to a low level, because that is how fraud is occurring in churches. It's $20 at a time, $100 at a time. Consistency of processes is incredibly important. I love my example of you're not buying a boat that floats 90% of the time. And finally, setting a good tone at the top that stresses the importance of following these procedures and that infractions will be followed up on. Way back in the beginning of this presentation, we said that 70% of church frauds were not reported to authorities. There's a lot of reasons and a lot of things that go into that, but it does contribute to a tone of acceptance. And so let's be cognizant of the tone we have towards our internal controls. So what we want to do is use the rest of this time for individual questions. Any other disclaimer, Chris, or should we go for it?
Allison, do you want to jump in? I think you're going to pause the recording.
I'm going to stop recording now.